Let's bring in now CNBC's Rosanna Lockwood. Rosanna, I do want to talk a little bit about the global impact that this is having, particularly on the markets. The ruble is down quite a bit, but what else can you tell us?
Yeah, I think it's important to note that just from a tone perspective here at CNBC this morning, the way that we're dealing with this, of course, is looking at the financial impact of what we've seen happen overnight in Ukraine. But it doesn't mean that businesses and traders out there are in hunting for profits. It's actually got to consider that a lot of this war is going to be fought from the Western side. Economically, we will face huge economic sanctions packages. And we're interested in the way that's affecting markets this morning. So Asia, that is normally the early warning sign, closing down sharply lower in the red. European markets have just opened deeply in the red as well. The broad stock 600 off by as much as 3%, seeing bourses in Europe in decline. And as we look at US futures as well, our indicator of how Wall Street is about to open in a few hours' time, sharply lower, by which I mean almost 850 points to the offside for the Dow Jones. So that is very major indeed. Now, you mentioned the ruble there. It's actually fallen to its lowest level against the USD on record. No big surprises there. And we are, of course, monitoring the economic situation in Russia itself. You've got the MOEX Russia index, which is their index in that country, down almost 30%. So all this idea that a lot of this risk was already priced into Russian companies and Russian markets is being proven not so true this morning. Now, I think it also behooves us to remind viewers that from a sanctions perspective, what the White House will be focusing on, and other major Western powers as well, will be energy. We're already in an energy crisis in many parts of the world. Russia accounts for around a quarter of all natural gas exports. Any disruption to gas supply pipelines through Ukraine could cause major supply disruption here in Europe. We already know that approval for the Nord Stream 2 pipeline has been frozen. It's likely now off the table. You could also see this idea of Russia being moved from the SWIFT financial messaging system, which has been one of the major sanctions threatened against Russia for years, but has never actually been deployed. And in terms of elsewhere in the markets, keeping a very close eye on commodities, natural commodities, things like wheat, with Russia and Ukraine accounting for just a huge export globally of wheat. Oil, now that is the major one to look at. Crude oil topping $100 a barrel this morning for the first time since 2014. Now, when you consider how oil is going to be traded, traders around the world will have to be very careful with this barrage of sanctions about how they handle barrels of Russian oil. Russia, of course, another major global exporter of that. And also raw materials, things like nickel, palladium, aluminium, titanium. Russia is a big player in those markets as well. So when we take it all into account, this is going to have a huge roiling effect on the global markets. And then in terms of where investors are looking today, in terms of how they're sort of hedging their portfolios, it's a risk-off sentiment. You're seeing a lot of sell-off in equities, so we're going to continue likely to see bourses declining throughout the day in the equities markets. And then you have this traditional, what we call in the markets, flight to safety. So instead, investors will look to put their money into safe assets like gold. You've seen that topping, heading up towards $940 an ounce so far in the last couple of hours. And you also see investors piling into fixed income, into bonds. That's considered a safe haven in the market. So with that, you see yields coming off bond prices as well. So everything we've seen this morning in terms of activity in the markets has been to be expected, but I would say it's been extreme, some of these movements. We're going to continue monitoring them throughout the morning, especially as we head towards the Wall Street Open.
And I do hope you keep us updated on this. One quick question about SWIFT. I know that's a set of sanctions that have been threatened against Russia for some time now. What would it mean to pull Russia's ability to access SWIFT?
It would be absolutely enormous, Katie. It basically means that Russian financial payments inside and outside the company couldn't be made in cross-border transactions. SWIFT is a huge part of the major cross-border banking transaction system. So far, as you said there, it's never actually been pulled on Russia. So whilst there have been sanctions against Russia in terms of financial payments and cross-border transactions since 2014, since the annexation of Crimea, and it has made it a lot harder for Russians to get their money outside the country, for foreigners to do business with Russian companies and with Russian banks. There have been ways around this. For example, in the past couple of years, there have been banks in Europe, places like Germany, that have set up corresponding bank relationships with banks inside Russia. Russia. So if you wanted to send your money inside or outside Russia, you would deal with one of these banks instead. And that was seen as a way of kind of helping the system. But in terms of the way that the Kremlin views this, of course, we've heard them saying repeatedly in the last few weeks that they can shrug off sanctions. They've learned to live with sanctions. But given that SWIFT, this huge global financial messaging system, this great big tool in terms of sanctions, hasn't been deployed yet, if and when it is deployed, that would indeed have a major effect on isolating Russia further from the global financial network.
Rosanna Lockwood. Rosanna, thank you so much for laying that out for us.